All right. Thank you for pointing that out, Mr. Jake. Thank you very much. Thank you very much. Thank you very much. I it totally skipped my mind. The first session was recorded though. The first session was recorded. So, all right. So remember I said we're trying to use correlations, price correlations, to correlate GBP USD Euro GBP and use that decision to trade Euro USD. All right. What I'm about to teach you now is something so deep, so renowned. It's something so powerful that if you understand it well enough, the kind of trades you would take are going to be so amazing. All right, so amazing. You're going to be catching trades of 100 plus pips at a go. You understand? You're going to be catching trades of 100 plus pips at a go, and I'm going to show you how what makes this strategy extremely as powerful as it is. All right. So when we say a chart of a commodity GBP USD is bullish, all right. When we say it's bullish, what we are simply saying is that it has an upward momentum, right? However, what that tells you is that from the last session, that tells you that pounds is the stronger commodity, all right? It tells you that the Great British Pounds is the stronger commodity of the two, all right? The same way, if you have a chart of Euro GBP, all right, you have a chart of Euro GBP. And then that chart also is bullish. All right. The Euro GBP chart is also bullish. What that tells you is that Euro, all right, is stronger than pounds. Are we still together? All right. So correlating between these two, all right, we've seen that pounds is stronger than dollar, all right. We have also seen that euro is, however, stronger than pounds, all right. We've seen that euro is, however, stronger than pounds. That will tell us now that if we wanted to trade a chart of euro against US dollar, which one of the two pairs is going to be stronger? Which of the two commodities will be stronger? Or let me say, what's going to be the momentum on a Euro USD chart? I need to hear your opinions in the comment section right now. What is going to be the momentum of a Euro USD chart? GBP USD, we have a bullish chart. Euro GBP, we have a bullish chart. All right. So which of the two would be, what would be the momentum on a Euro USD chart? Beautiful. I'm seeing everybody commenting their opinions. Beautiful. All right. I'm still waiting. I want to see two more responses before I move on. I want to see two more responses. I've seen 3 so far. I want to see 2 more to make it 5. So which of the two, what is going to be the momentum on the Euro USD chart? What's going to be the momentum? Beautiful. I want to see 1 more. Beautiful. So we would have a bullish momentum on the Euro USD chart. All right. Because if GBP is naturally stronger than USD, however, Euro is stronger than GBP. What that tells you is that on a chart of Euro USD, all right, the bullish momentum is going to be stronger. All right, because if we wanted to place these 3 commodities in a rank, all right, if we wanted to give them positions, all right, so just assume that it's an Olympic Games. All right, just imagine, picture that there's an Olympic game. Imagine that there's an Olympic Games, all right, and then we have first position, second position, and then third position. All right, so this is first, second, third. All right, so amongst these 3 commodities, we have GBP, we have Euro, and then we have USD. Among these three commodities, which one do you think is going to take first position? We have euro, we have pounds, we have dollars. Which of these three is going to take the first position based on this price correlation that we just talked about? Beautiful. So on the first position, we have euro. All right. So second position, who do we have at the second position? Beautiful. Our second position is pounds, and then that means our third position is dollar. All right. So imagine that these three guys, all right, these three guys just finished an Olympic race. All right, they just finished an Olympic race where euro was first, pound was second, dollar was third. All right. It means that if you now asked the first position, which is euro, to race against the third position, which is dollar, the gap between the two of them is going to be higher than the gap between pounds and dollar. All right? Because euro is not, based on this analogy, euro and the euro commodity and the US dollar commodity, they are not mates. All right? There is still a commodity in between them. So if they were to race together, euro is going to gap dollar so far. All right? It's going to be like asking Usain Bolt to race against me. Because even on my best days as an athlete, I can't finish 100 meters in 10 minutes. Yes, I'm a very relaxed athlete. So I might be taking my 100 meter with a bottle of Chivita or fruit juice in my left hand. And on the other hand, I'm having a munch of donuts. You understand? Because I can't come and kill myself. I'm a Nigerian. All right? And athletes in Nigeria don't get paid well. So I can't run a race, get a title, get a world record title, and then come back home to live in a tattered house. You understand? All right? Or risk my head that maybe after I win the record, somebody will come and say, Oga, you don't win money. Hey, today, we have something for the boys. Before they come and rob me in my house. You understand? So that 100 meters, I take it at my own pace. So that's just, by the way, I just wanted to lighten the atmosphere a little because it's looking like we've been too serious. All right? So if we have a race between euro and US dollar, all right, euro is definitely going to go way beyond dollar because they are not mates, all right? Dollar might still be trying to struggle with pounds, but euro is in a class of its own based on this analogy, all right? So having said that, let me take us deeper into price correlations. But before that, if you understood what I've explained so far, I need you to drop a comment on the chat box. Thank you, I understand. Thank you, I understand. Thank you, I understand. Let's do that quickly, people. Let's do that. Let's do that. Let's do that. Beautiful, 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 beautiful. All right, so God bless you. Let's go on to the next one. All right, all right, all right. So having said that, all right, what you need to do in order to be able to trade price correlations amazingly well, I'm going to be sharing with you a secret that many Forex mentors do not share with their students, all right? Especially the ones that are not paid. I'm going to be sharing with you a fact that is difficult to come across, a technique that is difficult to come across anywhere. You won't even find this on YouTube, all right? You won't find it on YouTube. I'm telling you this frankly, all right? So this is a trick that I personally use, all right? And it works amazingly well for me. It works amazingly well for me. So this is what we're going to do. Whenever you want to take trades, all right, whenever you want to analyze a market and use price correlations to influence your decision. Thank you, Mr. David. Thank you so much. You're welcome. Whenever you want to take a trade, all right, you're trying to analyze and then come to a conclusion about your trades, all right? Say, for example, you're looking at the US dollar, all right? And then you want to do price correlation to understand what direction to trade, all right? So first of all, like I mentioned last week, we have majors. You need to understand that we have majors, we have minors, we have exotics. or crosses. All right. These are the three types of commodities that we have in the foreign exchange market. The majors are the commodities that are paired, all right, where the USD is the base commodity. All right. The minors are where USD is denominator. All right. And the exotics or crosses do not contain USD. All right. So the exotics, example of exotics are commodities like CAD JPY, which I mentioned the other day. All right. They are exotics, they are crosses, but I like to put everything under the same basket because I don't have time to stress my mind with all of those details. All right. What I care about is making money. That's all that concerns me. If it's not making money, it's not making enough sense for me to bother myself about that border. All right. So let's talk about, so when I want to trade the US dollar, and what I want to do is I want to do a price correlation analysis on the US dollar. All right. So what I'm going to do is I create a chart, all right, or a table, all right, and say, okay, the title of this table is US dollar. All right. And then I take, we have USD JPY, we have USD CHF, we have USD CAD, we have USD NZD. NZD is short for New Zealand dollar. We have USD ZAR. And so these now are like the majors. All right. Although USD ZAR, I'm not sure USD ZAR is a major in the sense of major, but I don't care. So we also have on the other hand, we have GBP USD. We have Euro USD. We have Euro USD. Which other one is that? So let's just leave that as that. So what we want to do is we want to define, although for defining the strength of the US dollar, there's a commodity that people also use to analyze it. It's called the US dollar index. All right, it's called the US dollar index. I have a couple of friends who trade that. You can use the US dollar index to identify the strength of the dollar. It's also called DXY. All right. Some of you might have come across it, but I'm trying to show you how to do price correlation by your own self. All right. To know which commodity, US dollar index will show you, it will show you the strength or the weakness of the dollar. All right. However, it will not inform you on which pair would be the best pair or the best commodity for you to trade. All right. So what I do is I look at all of these commodities that contain the US dollar. All right. If on the GBP USD, we have a bullish chart. Euro USD, we have a bullish chart. All right. USD JPY, we have a bearish chart. All right. USD CHF, we have a bullish chart. USD CAD, we have a bullish chart. All right. This is UC. This is UJ. This is I can't even remember. This is let's say this is NZD USD, NU. This is GU. This is EU. All right. So we have a bullish chart on GU. We have a bullish chart on EU. We have a bearish chart on NU. We have a bullish chart on UJ, a bullish chart on UC. All right. So I haven't had this 5. I might not go more than beyond this 5. All right. The next thing is, this is telling me GBP is strong, Euro is strong, and the New Zealand dollar is weak. The US dollar is a little bit strong. which means it's stronger than the Japanese yen, is also stronger than the Canadian dollar. All right. The next thing I now do is I can check a chart of since GBP is stronger than US dollar and US dollar is stronger than um, Canadian dollar. All right. If I go to a chart of GBP card, what do you think the momentum on the GBP card chart would look like? I want to hear your opinions. I want to hear your views in the chat box. GU is bullish. You see GBP is stronger than USD. USD is stronger than Canadian dollar. So if you go to a chart of GBP versus the Canadian dollar, what would the momentum look like on that chart? All right. The time frame, the best time frame for price correlation, which is also my favorite time frame for analysis, would be on the 4 hours chart. All right. However, I have a friend who doesn't trade the daily because he's a long-term swing trader. All right. So he does his analysis on the daily chart. All right. And based on the daily chart, that's how he does it. However, you can use any time frame. You can actually use any time frame. And the reason why I said you can use any time frame is because what you're using for your information is not just one candle. All right, you're not using one candle on the time frame. You're using the overall momentum of that time frame. All right, so even if it's a 15 minutes time frame, you're looking at the overall momentum. If it's a 1 hour time frame, you're looking at the overall momentum. If it's a 4 hour time frame, you're looking at the overall momentum. Is it in a bullish trend or a bearish trend? All right. So based on that, we've come to the conclusion that our GBP card chart is going to be bullish. All right. So instead of trading GBP USD or USD card, if I come to trade GBP card with a prediction of a bullish momentum, all right, I'm actually going to catch so many more pips on GBP card than I would have caught trading either USD card or just GBP USD alone. Did we get that? I want to hear in the comment section if you understood that. Beautiful. So with this, you're going to begin to understand how we trade. All right, such that when I begin to show, although the technical analysis part and the detailed part is reserved for my paid students, but when we talk about price correlation, say for example, you analyze GBP USD, price is at a major turning point. The same on the USD card, price is also at a turning point. When you go to a chart of GBP card, all right, what you're going to observe on that chart is going to be mind-blowing because the movement on that chart is going to be skyrocketing. All right. So based on this is why I wanted to show us price correlations. All right. Because when you understand price correlations in detail, when you understand it in detail, you will trade like a professional. All right. You will not even be among those people who continue to shout the market makers are manipulating the market. You won't have a business with the market makers because you made a decision based on more than sufficient information. All right. You had a plethora of reasons why that trade was going to work. All right. It wasn't just based on analysis from one commodity. It was based on correlation from several commodities. Do we get that? So if you've learned something spectacular, I want to hear you say that in the chat box. That was amazing. Just type "that was amazing" in the chat section. Let me know that you've learned something serious, something amazing. Let's do that. Let's do that. All right. Thank you. Thank you. Thank you. Thank you. Thank you. Thank you. All right. So I want to believe that we understand. All right. We've come to understand what we talk about. Thank you, Mr. David. Thank you, Mr. Jaffe. Thank you, Mr. Jake. I want to believe that right now we understand to a large extent what we talk about when we begin to make reference to when we begin to make reference to price correlations. All right. So what I need you to do, because the US dollar is like the central commodity, is like the central currency in the commodity market, in the currency market. All right, it's central. All right, and that's why it's almost as if the currency market is graduated in dollar, because it has a total volume of over $6.6 trillion traded every single day. All right, because the dollar is like the universal currency. So when you want to do price correlations, all right, remember what I said. Start with a chart, a table, draw a table, US dollar. All right, draw a table, US dollar. Then make your analysis on US dollar, USD JPY, USD CHF, USD CAD. Make your analysis on the majors first. All right, then make your analysis next on the minors. Then make your analysis on the exotics and the crosses, if you want to go that far. But usually, just analyzing on the majors should be enough, should give you sufficient information to do your price correlation appropriately. All right. So do a chart of the majors, all right, and try to put them in a position. All right. So try to rank them. So you have first position. So you have first position, second position, third position. Then we have fourth position, and so on. All right, and so on. So whenever you want to now trade, all right, whenever you want to make a trading decision, it becomes easy for you to trade the first position against the fourth position. All right, if you're trading the first position against the fourth position, it means that you should be ready to see a very crazy, weird momentum. All right, you should naturally expect to see a very weird momentum, because it's just going to be amazingly bullish. All right. So likewise, if you're trading the second against the fourth, but never, ever, ever trade the third and the fourth against each other, or the second and the third against each other, or the first and the second against each other, if what you're using is a price correlation analysis. If you're using price correlation analysis, it's usually safer to trade the first against the third, or the first against the fourth, or the second against the fourth. All right. Always ensure that there's at least one position in between the two commodities you're trading. All right. Because it's going to make your life so simpler, so much more beautiful. All right. During the course of the week, I might be dropping an indicator, an MT4 indicator that would help you do price correlations better. I am not promising. I am only saying that I am tempted to do such. It's a temptation. So I may end up doing that during the week. I cannot categorically promise that now. All right, because my week is already laid out for me. All my activities for the week is already cut out for me. But peradventure, I wake up to a dream of angels, or maybe the Lord touches me in my dream, you understand, while I'm asleep, and then gives me the grace to be more generous with the things that he has given me. I might be able to drop it during the week. So pray that in my prayer, the Lord will speak to me. All right. So I cannot say beyond that. Of course, Mr. Jake, I know you would appreciate it. I would appreciate it if I had someone who was teaching me. All right. So pray for it. Pray for it. I trust that God answers your prayers. All right. So this is price correlation, and honestly, sincerely, it is a big deal. All right. It is a big deal. God bless you too, Mr. Jake. So I don't want you to take it for granted. As many times as possible after this session, go back to the video, watch it again, all right, until you're able to get the total drive. All right. And in case I am unable to drop the indicator, all right, in case I'm unable to drop the indicator, I'm going to drop a Word document, a Word template, that instead of you having to write down inside the chart for every week, all right, I'm going to drop a Word template that will serve as your price correlation template. All right. So all you have to do is to just go to that template and fill in the date, the week. All right, you fill in the week or the date, and then you fill in the correlation. All the commodities would already be typed on that word template. All the commodities will already be there. So all you would need to do would be to open the chart and type, okay, this one is bullish, this one is bullish, this one is bearish, this one is ranging, all right, this one is sideways, this one is bullish, this one is bullish, this one is sideways, all right. So it's going to have all of those informations ready made. So I might make it something that you can just come and tick whether it's bullish, bearish, or sideways. I might go that far for you. I'm not promising that one too, but I'm promising that there will be a Word document. But the indicator is not a promise. The advanced Word document is also not a promise, but I'm assuring you a Word document will be made available. All right. So if you have enjoyed this session so far, I need you to drop a comment in the comment section and say, thank you, thank you, thank you, thank you, thank you. Let's do that quickly. So I know that we've covered some ground. If you've learned something amazing so far, just say thank you. Beautiful, beautiful, beautiful. So I want to believe you're enjoying yourself so far. I want to believe that you're honestly, sincerely enjoying this session so far. All right. So in the next 15 minutes, we're going to come to the close of this session so that we'll take another 15 minutes break and then we start the third session. All right. In the next 10 minutes, we're going to end this session and then we're going to come into the next session. Thank you, Mr. Jake. So I'm going to go for the break. I'm also going to go refresh myself. Then in the third session, let me just give us hints on what we'll be talking about in the next session. What we're talking about in the next session is all right. So the next session, we're going to be talking about why do people lose money trading? All right. Why? What is the reason? Because there's so much hustle. There's so much talk about people venturing into the foreign exchange industry and then running out with their tails in between their legs. You understand? People scared out of their wits because they've lost their life savings. They've lost so much to the foreign exchange market. All right. So during the next session, we're going to be talking about why exactly do people lose money trading Forex? What is the reason? All right. So the next session is going to be more of a diagnostic session. All right. We're going to be diagnosing ourselves. And then you're going to by yourself know what is the reason why I have been losing money. All right. I'm going to outline all the possible reasons. And then you are going to by yourself diagnose yourself. All right. So you're going to be your own doctor. And then you're going to discover, oh, so this is the mistake I've been making. And then by that, you're going to be delivered for life from losing money in the foreign exchange market. All right. So I wanted to quickly rate this session over 10. What would you score me if you were my course supervisor? What would be my mark over 10? Give me a score, rate this session. Let me quickly have that in the chat box right now. Thank you. Thank you, thank you, thank you. Keep it coming, keep it coming, keep the reviews coming. Beautiful, 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 beautiful. All right, so thank you, everybody. You scored me a 10 over 10, and I want to say a big thank you to every one of you. All right, I want to say a very big thank you to every one of you. So in the next 15 minutes, we're going to be back by 12:45. Not even 15 minutes. In the next 12 minutes, we're going to be back by 12:45 for the third session. You don't want to miss it. Why you often lose money trading Forex. See you in the next 15 minutes or in the next in the next 11 minutes. So see you in the next 11 minutes. God bless you. Have a beautiful rest of the break.